Well, good evening, everyone. K Kim here from the Traders Club, and thank you for tuning in for another week of midweek update video. And let's look at the market. We'll look at the market indices, S&P 500, the Russell, Nasdaq, and the financial sector, as we always do on a weekly basis. And we'll look at Apple and Tesla. Apple had a negative earnings reaction today. So we'll look at that, we'll talk about that, we'll look at Tesla like we always do, and then we end this video there. I promise it's not going to be a long one. I think I've done enough analysis as far as the long term is concerned in last several videos. So I'll make this one quick, and just let's get into a more of a minor term here. And obviously, but we gotta understand the perspective, though, right? We gotta understand the perspective that we've been talking about, that this was gonna be a potential level of support, and we talked about the last few weeks, which is coinciding also with the daily 200 SMA right there. And that level has been very, very strong support because it has been respected as a primary term uptrend. And again, what I mean by that, primary term, intermediate term, minor term, why don't you go back to last week's video, and then I explain more about that. So it's important that that primary term uptrend support, the vicinity, right, this level was held, and we were able to find some buyers at that level. We also talked about 65 minutes bullish divergence, which I wrote an article about, which we had it right in this vicinity right here. This was back in early July. All the major indices had that 65 minute chart bullish divergence, and then with that kind of, because when we have a 65-minute chart bullish divergence, that's a tiny sparks, which means we have a clandestine buyers, these hidden buyers, value buyers, the dip buyers, right? So they came in and we gapped the market up. This is what I call, kind of jumping over the fence. We had that resistance level. This was very, very important level. This is a pivotal level actually for the bears. What the bears wanted to see, what the sellers wanted to see at this vicinity. The sellers wanted this level to see more sellers to come in and flush this thing down, thus creating a lower high and a lower low. So this is what I like to call when the buyers jumping over the fence. This is a fence, and when the buyers do not want to deal with that, resistance there, they jump over that fence, and then you can see we brought it up. We're pulling back, and pulling back is definitely normal because everybody knows market is not gonna go straight up. We are going to have pullbacks. We are going to have declines. We're going to have shenanigans, right? That's the market we're dealing with. So, if these 3 days are making you like, oh my goodness, what's gonna happen? I think you should quit this game, right? Because, how are you gonna live with your life like that? Because, look at this market. Just look at all this year. The whole year, we had nothing but shenanigans. We had nothing but up and downs. So 3 days making you go nuts, then really this is not the game for you. I'm not trying to be arrogant or nothing like that. It's just this market is going to slaughter people, become emotional, and you know what I'm saying, and take these kind of days, like 3 days, 3 days of decline or a little just very tiny pullbacks, and start freaking out. So this is definitely not a level to freak out. This is definitely not a level to panic. I remember, I did a video here. Was it last week? Is it time to panic? And I did the video. Not right now. This is where I'm doing my video today. I did my video down here, and the title was, "Is it time to panic?" And the answer was no. So is it time to panic here? No, definitely not. If anything, if you're gonna put that in a scale, maybe a little bit more to panic. Maybe here, yeah, maybe some concerning aspect there. Up here, no. Many would argue, well, okay, we're gonna do this kind of a wide scale of head and shoulders. and then I repudiated that statement on the last week's video, why we shouldn't be concerned about the data that is in there. Our job is to do an analysis using a tangible data, which is data is writable here. And definitely anything can happen, obviously. But right now we're above 10, 20, 50, all these major moving averages, including 100 SMA here. The gap is still open. I think that, minor term, what we want to see, the worst case scenario, kind of we come back down here, kind of retest that 50 MA, and then maybe kind of zig around a little bit. Worst case, and this will be a worst case. Let's say, bears really want to fill this gap, worst case scenario. And you know what the bears always say? They always say that the gap must be filled. That is not true, guys, because I'll give you just demonstration right here. There's a gap right here. Don't buy into that gap must be filled. It's not true. Bears came down and trying to fill this gap, did not succeed. Bears trying again and trying to fill this gap, did not succeed. And you know what? Some gaps do get filled, but some gaps never gets filled. Look at the gap right here. So the theory that gap must be filled is baloney. I would not recommend to listen to that trash and look and put it as your some kind of rule or formula, right? And so there's definitely a chances that this gap right here, these boxes that you can see, that gap might get filled because it's more of a minor term gap. But keep in mind, not all gaps must be filled, right? So there isn't a formula like, well, if there's a gap, it must be filled within like 2-3 weeks. It doesn't work that way, right? So we went up, then it should have been filled. It didn't. So could happen though. I think in my opinion, I think, we got a minor term support right here because we fill this tiny gap right here. A lot of times when gap gets filled, it can become a support. If we lose that level, we'll go back to about the 209-ish level right about here and then see if that level gets, if we can find some support there. And worst case scenario, we'll come all the way down, fill this gap, even come a little bit lower, and I come back to that support level that, we talked about, that primary term uptrend support, and then kind of fizzle around a little bit and then make some move there. So my forecast in the market, we may see some decline, we may see some pullbacks, we may see some volatility, but obviously we must respect uptrend. We're still in a primary term uptrend, we're still in an intermediate term uptrend, and we are now cultivating potentially a minor term uptrend, and it could come down and create the minor term higher low, and then we could be doing something like this as well. But I wouldn't know that until we see some data there. So you know what, we're at the resistance. Again, just because at the resistance doesn't mean that's a level that we're gonna have all kinds of sellers coming in and then the whole market is gonna crash. If that's the case, well, we should have a lot of sellers. We should have had, this market should have crashed 1,000 times and never did, right? I mean, you can see all these resistance levels that it cleared, and people are like, why does it keep doing that? Well, that's what we call primary term uptrend. Why is it keep clearing these highs, right? Why are we keep cultivating high lows? Again, that's what we call a trend. So we're still in an uptrend without legitimate topping pattern. There's always some kind of formation or some kind of a speculations, allegations, but without a full confirmation, that means really nothing here. So as of today, when I look at S&P 500 here, I am bullish in the minor term, I am bullish in the intermediate term, I am bullish in a primary term. For the fact that we're above all the moving averages, we are now, repudiating this, this topping pattern. This wasn't a massive topping pattern. This was more like a minor term to intermediate term topping pattern. We repudiated by getting above this neckline that I just drew there. And so as long as we hang around here, I think that we can make this move. And I definitely think that market is still very much bullish, but we're gonna have a little bit of pullbacks here and there. Just keep the bears in check, keep the bears, let them think that maybe this thing is still gonna roll over. And that's how this market loves to play with your heart and then tear your heart out. But you see, it will be what it does though. Bears and bulls both wish that this market will tear tear their heart out and just completely demolish them. But what they do is they just really keep playing that this market is gonna roll over someday, and then just drag on and on and on and just keep playing with their heart. So then, you know, they're you know, these bears is never gonna go away. You know what I mean? So that's why we have certain bears that have been, you know, calling market top for the last 2 years, last 3 years, because of that. But anyhow, you know, I think S&P, when I look at S&P 500, I do think that it looks healthy. I mean, we have certain, you know, there's certain concerns on certain formations, but again, there always will be certain concerns. There won't be a day that you look at this market and 100% go. There won't be a day like that. There's always going to be a concern in the market. There's always going to be some certain kind of fear. So, you know, in my opinion, you know, I think the market is bullish. I think I'm going to stay bullish. And I can't guarantee, I can't promise how fast we're going to get to like 220, 240. But I do believe that, you know, we're going to continue to cultivate primary term uptrend. Let's continue here with the Russell 2000. You know, we came down. Obviously, we get these declines here. You know, we get these declines, but that's what it does. That's what the market does. We get up. We want to digest and move. We pull back a little bit. We get up a little bit. You know, it didn't go up as high as a lot of people wish, but it didn't. It come back down and it goes back up and then pull back down, goes back up, come back down. Right? So question is right now is that, well, why didn't we go up all the way? Why are we stopping in the middle of it? Well, see that question here, you know, if you're asking a question here, you probably ask the same question down here. Well, okay, why didn't we going up? Why are we pulling back? You see, sometimes, again, this market is going to check with bears hard, make sure the bears are still on board, and then make sure bears are still kind of lingering around, play with their heart, and and then it's just going to do that. And then probably for several months, it's going to tear bears heart out. So I'm not saying that's exactly what's going to happen, because nobody truly knows, because I'm not psychic, you know? But what I'm saying is there's a probability that we can pull back and do shenanigans like this before going higher. That's what I'm saying. And why do I think that, you know, we have a higher probability of doing that than just rolling over? Again, go back to my last couple weeks of video, and then I explained it. I don't want to explain it again. And so, you know, Russell, and again, people be like, okay, you know, okay, is this some kind of head and shoulder? You see, again, with that, this was a head and shoulder here too. What happened? Formation will always be there. This was some kind of head and shoulders too. You know, this could have been some kind of head and shoulders. You know, like, oh my God, look at left shoulder head, maybe a right shoulder. No, it didn't play it out. And you could have said, oh, there's a head and shoulder, left shoulder, head, right shoulder. Oh my goodness. Oh, that didn't work. Oh, okay. Now there's head and shoulder. Yes, now you see what's happening here. You see what the market is doing. This is what market does. It's almost like hypnosis for bears. You know, you just keep playing. So please stop worrying about because obviously there will always be a certain formations or allegations, speculation will be there without the full confirmation. We need a full confirmation in this market because we're dealing with a prolonged uptrend. Without that, it just means nothing. You know, Russell 2000, I can't stay bullish. I can't say bullish in the minor term because we're back below, you know, these major moving averages, minor term moving averages like 10 EM, 20 EM, 50 EM. So we're been neutral at best in a minor term. Intermediate to primary term, we're obviously still bullish because we're still cultivating higher highs and higher lows. You can see that we're still seeing that rising 100 SMA there, obviously 200, and we haven't touched 200 for a while, but still rising. So primary, intermediate term, we're still up. We're still in an uptrend. I still stay bullish in the intermediate to primary term. However, in the minor term, we're a bit neutral at this point, but again, it's a minor term, so things can change pretty quickly. If we can get above 126.41, I do believe that we could probably continue higher on the Russell there. Let's look at let's look at Nasdaq here. Right, Nasdaq is awesome because Nasdaq just made new highs here. This is exactly what the primary term uptrend does. Higher highs, higher lows, the cultivation, the establishment, institution of this primary term uptrend continue to be developed, continue to be confirmed, and we're saying that we're still in a primary term uptrend. As long as we're in a primary term uptrend, you know, we have to respect that, right? The trend is assumed in effect until it gives us a clear signal. Okay, clear signal. I've been saying this so many times that it has been reversed with ED, right? So do we see any of that? No. So what we do not. So Nasdaq looking very, very strong. Nasdaq, I stay bullish in the minor term, stay bullish in the intermediate term, stay bullish in the primary term. We're above all the moving averages. And you want to talk about this little pullback here, and you want to get a little bit credit of that. You know, I don't know, because there's always going to be a little pullback, and there's always going to be little declines, and that's what the market does. Obviously, you know, after this kind of move, it is given that the market is going to pull back. After these kind of move, it is given that market is going to have some kind of pullback. I mean, without the pullback, there will be no cultivation of an uptrend, because uptrend doesn't mean the market does this. Uptrend means market does this, right? So it's almost like ironic that, you know, both bears are celebrating because we're seeing a little bit of pullback. It just, to me, it's almost puzzling to me. You know, I maybe because they're very, very short term, they're looking at things very, very short term horizon. Maybe that's why. Right, Nasdaq very bullish. You know, we had a certain concern right about here, but that has been completely repudiated. That it was a potential topping pattern, but it was never truly confirmed. So obviously, the repudiation nullification process has started here and then completed, and then this is no longer a threat there. So a little bit of pullback, maybe come back down about here. You can throw a Fibonacci and see, you know, what are the retracement level. I taught you guys how to how to do that. And so go ahead and do that and see, you know what, I'll show you right now. So you go, what you want to do is, this is a minor term Fibonacci retracement right about here. So you can see this is a level, as long as we stay above this, you know, what I call FRZ, Fibonacci retracement zone, it is considered as a higher low in the minor term. So any of this level can act as support, and then we can bounce from that level, and then possibly can get to about 120 there, which I still think that's a good level of support. And we still been long, you know, on Nasdaq since, like, you know, what is it, about February 10th there, so we're still long there. Same with the Russell, we've been wrong. I mean, I've been writing an article with this. We've been wrong on long on Russell since you know, late December, and then early February right here, and then you can see you know, we're still obviously we're still long in that, and we're not gonna panic just because, you know, I mean, I say the same thing. I'm not gonna panic because that happened. I'm not gonna panic because that happened, because that's what the market does. We get declines, we get pullbacks. A financial sector actually doing very, very well. As long as the banks are doing well, that actually give us a kind of a good, you know, good way of looking at the market, because you do want to see, this is one of the reasons why, you know, I do look at financial sector. If you've been following my videos, you can see that how I look at indices, major indices, and then you see me looking at the financial sector. There are other sectors, but I look at financial sectors like one of the index, because I do believe that financial sector has to be, the banks has to be strong for this market to have to be healthy. So obviously, financials been doing well. Higher lows, higher highs. You can see we in between all that higher lows and high, you see shenanigans, you see up and down, you see volatility, right? That's what this market does. It is given. That's what you're gonna deal with. I mean, there are some years gonna have more volatility than others, but when we look at the financial sector, it's been volatile sector, right? It's just been a lot of up and downs. But you know what it does though? Even with all its volatility, it is faithful. It is faithful to what? It is faithful to its uptrend and primary term uptrend. What does that mean? Well, if you've been listening to me, as long as we cultivate and establish higher lows and higher highs, we're in an uptrend, right? So we're in an uptrend. You guys remember back in late, you know, if you go back, you can look at my video, the midweek update video back in February 25th, I actually my blog followers a midweek, the public video, not my members video, public video. I gave you guys setup here, and I did tell you guys that this is not a day trading setup. This is not a swing trading setup. This is set up for position trading. What I mean by that is to hold things for 6 months to a year, which, you know, this is where I gave you guys a setup. I went long, Traders Club members went long. Obviously, we've seen declines, but you can see where we're at today. And so that, you know, that's kind of what I was looking at. I mean, I knew there was going to be decline. I knew there was going to be shenanigan. I knew there was going to be volatility. But I think as long as we stay true to the primary term uptrend, I think it was going to do well. So, I mean, today we're doing, you know, it's not the best. I mean, not like our Boston Scientific or, you know, Starbucks trade. But, hey, it's something. It's better than losing, right? So looking at financial sector here, we're above 10, we're above 20, we're above 50, we're above 100. They're all rising. So minor term bullish, intermediate term bullish, primary term bullish. So we looked at all the indices here: financial, Nasdaq, Russell, Spider. Only thing that I didn't say the minor term bullish was Russell. Also was the only index I said minor term bit neutral. So if you put all that analysis together, what do we get? We're bullish in the market. It's gonna have pullbacks. It's not the time to panic. And I think we're just gonna stay bullish in the intermediate to primary term. And we'll look at certain levels this week there. Throw your Fibonacci here and see what are the levels you can look at as a potential level bounce there. So we'll go with that. And then next week, I will try to throw, if I have time next week, try to throw a live midweek update. So feel free to sign up for that. And then you can come out and hang out with me. And if you're curious how I look like, you can come up and make fun of me. So let's look at actually Apple, because Apple had earnings and then we had a huge earnings gap down. And let me tell you what, you know, when you're doing position trading, when you're doing things much a longer term, when it comes to earnings, it's you just gotta deal with it. Some days you're gonna have a good break, some days you're gonna have a bad break. Nobody can ever, you know, call it right. It's a 50-50 kind of deal. So when we have a big decline like this is definitely not a time to panic, because you guys remember this was back in January 27, 2000. This was the last year. So January 2014, with earnings gap down, and I've heard everything here. This is a market top. This, you know, Apple is not ready to go. Apple is not ready to make new all-time highs. This is gonna be a massive lower high. We had a monthly chart like shenanigan there, and so this thing is gonna go to like 50 or 55. You know, we're gonna come back down to the. I mean, I heard everything. People say all kinds of shenanigan all the time. And then what happened? You know, we came down a little bit lower, and then, yeah, it took some time, right? It took some time, but cleared that resistance. Was this earnings? I wonder, let me see, let me check. Man, I said I was gonna make this short, but this is what happens. I try to make it short, but there's so much to talk about, and it's already 22 minutes. And I'm trying to talk fast. I'm not trying to talk fast for the sake of talking fast, or trying to make myself sound smart. You know, I'm not a salesman. You know, I'm not trying to do that. I'm just, because there's so much to talk about, I have to talk so fast. We're gonna be here like for 2 hours, right? I'm trying to set up my chart here. How did I set up show earnings? Yeah? Wait. Yeah. That was earnings. That was an earnings call. So we had an earnings call right there. We came down, and then another earnings call, and it went down. And that's what it does. We're going to have earnings down, earnings up, and so that's what it does. But the only thing is that, you know, we can have, I'm not saying just because back in January 2014 with a gap down and markets, you know, it went back up. I'm not saying that's what Apple is going to do. And even then, it took a while. It's not that much for somebody like me, though, who hold things much longer. That took like 4 months. That's not that bad. It took 4 months, but it did well. And then what happened ever since then? Look at this, what it did. So, you know, I really don't think that at this time it's time to panic. And also, you know, even with that huge gap down, you know, we saw a lot of buyers down here, so that's a good sign. This gap was filled. And a lot of people are worrying about this becoming potential head and shoulder formation. You know, it could be. It's a bit messy, but I've been preaching this so many times. I've been preaching this on S&P 500, on the indices the last 2 weeks. Formation alone is not enough. We need a full confirmation. So this, to me though, this looks more like a consolidation at best, more like a channeling potentially, even a channel or consolidation. It doesn't look like a topping pattern. Obviously, it can become a topping pattern if we just go straight down and then we get below this level, get that, and start to cultivate lower highs and lower lows. But I think there's still a chance that because I forecast the market is bullish, I think there's still a chance that we can start to fill this gap. I mean, it's probably going to take some time and then break out. And then, you know, it could have towards the end of this year, you know, we can still get to some of these levels. I still think that we can get to 150s. I do. It could be by end of the year or even early next year. I'm still long on this. I have a journal post on this. My trade documented every, you know, not every day, but, you know, every step of the way. So you can go ahead and look at that. So, you know, we're down, we're below these moving averages. So obviously, minor term, we're bearish. Intermediate term, neutral to bullish. Primary term, obviously we're bullish. Primary term, we're talking, this is a primary term. You know, you can see, you know, primary term, we're definitely bullish. We're still, you know, in this fan lines there, and we're still cultivating higher lows and higher highs. So obviously it needs to clear about 133 to get to attract buyers, but that's not always the case. Just because it clears a resistance does not mean that this thing is going to go sky high and to the moon. That doesn't always happen, but generally speaking, because we've been holding, you know, hanging around here so much, that this is probably the level that you know you want to see this thing clearing. And then we go from there. So we probably have to see it again in the next few days. If you can see some kind of follow continuation there, this is a Marubozu candle after gap down, and that could insinuate, you know, possibly bulls are clandestine buyers are there. We don't know that. Maybe a couple days of follow to kind of reclaim that 10 EMA would be important in the minor term there. Let's look at Tesla, and I'll end this video there. Tesla. You know, one of the things that I realized about Tesla in a minor term is that we are now forming bearish divergence on MACD and RSI. Let me get rid of stochastic, because stochastic is not as accurate at this point on this particular name. So you can see we are forming this bearish divergence there on Tesla. Again, you know, just because we're forming this bearish divergence doesn't mean this thing gonna like go to nothing. What it means is it kind of a warning signal that, because last time we kind of did a similar thing there. Where was it? Let's see. Last time we did a similar thing there on Tesla. I mean, that was kind of grinding one, but you know, we did that. I guess only that was only, I guess I am mistaken on that. I thought there was another bearish divergence on those in these tops, but I don't see it except this one right here. But that one was grinding and finally did it. So you know, again, so we got that, but doesn't mean I wouldn't look at that as like, oh my god, that's bearish completely. I wouldn't say that. But with that bearish divergence in the picture, I think if we get below this neckline, that can be a double top in a minor term. Again, just because we have a double top does not mean that the whole thing is gonna go to nothing. I'm not saying that. It could be a minor term topping pattern where it can possibly come back down to about 100 SMA, maybe and recheck this level. And again, I've been telling you guys, I wouldn't want to go long in up here. I want to go long somewhere down here. Again, that doesn't mean we're gonna get down here. If it doesn't get down here, this thing just goes straight up. It's not my setup. I'm gonna let it go. So that's, and it looks bullish though. As of today, we're kind of hanging around. We're trying to get above that 1020. It looks bullish in a minor term, bullish in an intermediate term, bullish. As far as just chart is concerned, just price action, it looks bullish. What I'm saying is this is gonna turn bearish in the minor term if we get back below 255. But I wouldn't be like looking to short. I would wait until look for opportunity to go long, rather than trying to short below 255 there. So that's everything. You know what? Next time I won't say it. I won't say that I'm gonna make this short or nothing. It's 30 minutes gone by. I try to do as fast as I can. And just, you know, we just had to do 30. I don't know, other people do it for 10 minutes and 5 minutes. I really can't. I can't do it. I can't do it in 10 minutes. I can't do it in 7 minutes. I don't know why. It's just weird. There's so much to talk about. I just wanted to make sure I just let you guys know everything what's going on, and so guys it can be possibly helpful to you guys. So like if you have any questions, always feel free to use my blog. That's the best way to ask any questions there in comment section. I'm not active in stock Twitch, just to let you guys know. I know I have a lot of stock Twitch followers, you know, but I don't look at stock. Maybe I look at a couple times a week. So if you ask me a question, my response might be delayed. Twitter though, I do check at least once a day, but I'm not on Twitter like every second. Oh my god, this is what Spider doing 3 seconds later. Oh my, so I'm sorry, I'm making fun of some people, but you know, so I check once a day on Twitter there. But my blog is, and I don't have any. Some people think that, well, you get notification on your phone. Nope, I don't have a Twitter app or stock Twitch app on my phone. Why? Because I don't want to be bothered. I don't want to be bothered when I'm hanging out with friends or, you know, having my own time there. But I do have my, you know, my blog. If you write comments, I do get notifications. So if you want to get my attention right away, the best way is to either email me using my blog, the contact page, or to use my blog there. So we'll have a great night, and we'll see what happens next few days, and we'll go from there. We'll talk to you guys later.